Thanks, bye.
Okay, so next session we have a panel discussion right now on commercialization strategies. The moderator is going to be Francisco Sarrias. Maybe you already know him because he participated as well in the first bootcamp. He's senior sales manager at Gelurida, and the panelists who are participating in this panel are Mobolaji Oniburo, CEO of Digital Transaction Services, Owen McCall, Marketing Director at 3Coin Global Tree Project, and Shane Tan, co-founder and CMO of Coalculus Blockchain. Thank you so much, all of you, for participating in the bootcamp. And I leave you the floor. You can start with the panel as you want.
Okay, thank you very much, Carmen. Thanks for the opportunity. Well, this panel will tackle, I think, that in this very new market where the price of the crypto tokens sometimes obfuscate the real use case, it's important. I wanted to ask people, experienced people like our panelists that have been working in the space for a long time, which are the real hurdles to sell this technology or to sell their projects to traditional business. No? We at Gelurida, we sell infrastructure, blockchain infrastructure, and we see that the crypto startups, they are very open to accept this new technology. But when you talk with more traditional business, things change a lot. So I would like, for this first round, I will ask our panelists to be short in their presentations, to restrict to about 3 minutes, so we can have time to go through all the questions. I would like them to explain a little bit about themselves, how they get into blockchain, and what is doing their project, their company. We do a quick presentation about this, and then we go through different questions about the difficulties and the opportunities in the commercialization of blockchain technologies. So, Bolaji, if you could share with us about yourself and your company, the panel is for you. Please go ahead.
Good morning, everybody. My name is Bolaji Oniburo. I'm from Lagos, Nigeria. I'm the CEO of Digital Transaction Services Company, and we're a company focused on blockchain solutions. And of course, you know, there are a wide range of use cases to pursue. Prior to forming this company as a founder, I'd led another team to deliver a custom solution for the Nigerian Customs Service, looking at the excise trade management, where basically we issued licenses as digital assets for importers and also permits. So that whole project was a successful project using the Oracle blockchain service. And coming to digital transaction services, we looked at a few use cases that could help also, where we could provide solutions, looking at things like remittance, and because with blockchain, you inherently have remittance in all blockchains, being able to pay cross-border, because blockchain is on the internet, so it's irrelevant where the receiver is or the beneficiary is. So remittance obviously was the first use case, and then the other was security issuance for real estate and also artwork, NFTs. So those are the areas where we have focused on as a company, and I would like to obviously tell you more as we proceed.
Thank you a lot, Bolaji. So this is a very nice example about financial services and use of blockchain in public administration, which is, I think it's a field that will increase a lot in the next years. No? Now, I would like to go for Owen McCall, Marketing Director of 3Coin. 3Coin, Owen, could you please explain what is 3Coin? How did you get there? I think it's a very different project, but very interesting because it gives us a total new view of how we can use blockchain. Please, Owen, the panel is for you.
Definitely. Thanks, Francisco, for the invitation. Hi, everyone. My name is Owen McCall, as discussed, Marketing Director for TreeCoin and the Global Tree Project. What TreeCoin and Global Tree Project is, it's a sustainable reforestation company. We leverage the power of blockchain through a security token offering and also a payment token offering to connect investors with these hardwood assets at our property down in Paraguay. So we use blockchain basically to provide investors with a new way to get exposure to an asset class that's sort of been forgotten in some years, and that's hardwood for us. And now the TreeCoin project is kind of split on a couple of different big pillars of engagement. I mean, really what we're focused on is combating climate change, protecting rainforests from illegal illegal forestation problems. And basically what we've done is we're using a couple different types of technology. So of course the blockchain side with the security tokens, but then also a technology for us is the trees themselves that we use. So we use a specialized eucalyptus tree that's low oil and can grow in poor soil conditions. And what we're doing basically is we are reforesting areas of, it's called fallow land. So this is overused, sort of derelict plots of land that are no longer viable for farming. So we go in there with our specialized trees that can grow in these areas. And we've basically built a very interesting business use case that allows for long-term returns for investors over a 22-year period. As I say, it's all tied into a blockchain security token, which represents a claim on profits on the sale of these trees, the eventual sale of these trees over time. And then a payment token that we're working down on the ground in Paraguay. I'm hoping to address some of the big issues of the unbanked problems that we see in the developing world. And so we're looking at sort of giving these people an opportunity to participate in the new digital economy and addressing things such as wage instability and inflation of fiat currencies, all through the blockchain tokens that we've established. Now, TreeCoin and Global Tree Project, though our operations are in Paraguay, we're based in Switzerland. And yeah, I mean, my background, I come actually from the legal side of things. I studied international law, but I've been working in marketing and business development in the blockchain and crypto space for the last 5 or 6 years. And I came to the TreeCoin project. Well, it was really a coming together of a couple different interests of mine. One, of course, is the blockchain and crypto side, and then two is the climate change, the sustainability angle. And so for me, the project was really interesting for a number of reasons. So thank you.
Thank you very much, Owen. So we have projects in Africa, projects in America, and now we go to the other part of the world with Shane Tan from Qualculus Blockchain. He's based in Singapore. Shane, could you please explain what you do at Qualculus and what's your background in blockchain technology, please? Shane, are you with us?
Yeah. Can you hear me now?
Yeah, perfect.
Yeah, okay, great. Thank you so much for inviting me to this session, Francisco. I'm glad to be here representing Qualculus, where I'm the co-founder and the CMO of the blockchain platform. We are an enterprise blockchain solution company as well as a blockchain for enterprise provider. We work with majorly government institutions, listed companies, private companies, and help them to adopt and utilize blockchain-based decentralized solutions in their offerings. So what we offer is very simply in simple terms, a multi-chain blockchain platform where we have like hybrid deployments, and we allow many forms of different types of businesses coming from fintech to data encryption and healthcare, and have all these use cases eventually built upon Qualculus, and we target an enterprise and mainly enterprises only. So Qualculus, much like Jellybean does Ardo, we also have a native digital asset, and that is the Coal, traded publicly and listed on multiple exchanges. And Coal is the native gas that is needed by organizations and these enterprises to run transactions, validate transactions on our proof of stake blockchain platform. So that is essentially what we do, and the customers, the clients that we are looking at to serve in this area around Southeast Asia, and now we are expanding towards other parts of Europe as well to develop fintech solutions. Okay, so where about myself, basically, I started off in 2016, really being just a cryptocurrency trader. I started trading Bitcoin, and I got so interested in the technology. I started putting time and effort looking at the white papers and started consulting projects during that time where it was an ICO boom. So I got to know a lot of interesting projects and help these projects get some presence in Southeast Asia region. And from there, I progressed to working in the fintech space, mainly exchanges, mining companies, Chinese conglomerate that has expanded into Southeast Asia, and they are also doing crypto and blockchain. And from there, I gained really 4 to 5 years of solid experience in this space, and I continue to build upon that experience when I joined Coculus with my CEO, Jack Bai, to build Coculus to become what it is today, and to speak with enterprise clients about what this technology can bring to their business and get them to finally see the potential of blockchain. So yeah, that's my background, and I'd love to talk more about what we have done so far in the enterprise space, and then have a lively discussion with the rest of the panelists. Yep.
Thank you very much, Shane. Very interesting, because from different parts of the world, we are coming into blockchain mostly through crypto, but then we find other solutions. So the first question I was looking you to take a look was if really the corporate and public administrations are ready for decentralized solutions. Maybe Bolaji, you could explain us how was the project with the toll in Nigeria. How was the selling process? Were they combined? There was a leader there that was fan of decentralized solutions. Why they were looking for blockchain?
Absolutely. With the Nigerian customs, we already had a believer in blockchain. The head of customs innovation department was it was somebody who had a technical background. He told us when he was a much younger gentleman, he used to try to repair engines of cars. So he was a fascinating guy who loved blockchain and loved the implication of blockchain from the fact that it's going to help eradicate corruption. And Nigerian customs did have a very bad reputation in the country. So he was sort of a champion already. So there was very little sales presentation we needed to make. And in fact, I would admit at the time, which was 2017, Oracle as a company was yet to launch their blockchain platform. And obviously there was a relationship within Oracle that came to us to come and pitch blockchain to customs. So we had met with a team of about 20 customs officer and the comptroller general, and he was just like, when can you deliver the technology? He knew everything about cryptocurrencies. He knew everything about permissionless, permission blockchain. He was really sold. It was very easy for us to actually deliver the technology. In some instances, we had to wait for Oracle to make their global announcement in San Francisco at the Oracle World, and then we were the first to get the early release in Nigeria. So Nigeria was actually one of the first countries to launch the Oracle blockchain service because of this. So, but while the Nigerian customs project was a huge success in terms of adoption and readiness of clients in public administration, we find that in other departments, there's that lag of 1 to 2 years. They first have to understand it. There's a lot of misconception. They have lack of expertise. And then even when they get to understand it, there's that issue of control. You know, in the case of customs, customs was the network orchestrator. So they could onboard manufacturers and plants, you know, who were basically companies who were dealing with customs, which made sense for a permission blockchain. But for other organizations coming together, you know, it wasn't quite the example of extranet in the beginning, in the internet.com days. It's a little bit of a challenge deciding who becomes the orchestrator. But anytime you find a custodian in the loop, you know, like a bank, it becomes a little easier. Then you can give the responsibility to the custodian. Or in the case of a project we have with the Nigerian Stock Exchange, you could give that responsibility a little bit to the Nigerian Stock Exchange. And there's also anxiety towards public blockchain due to complexity. You have a lot of technology teams, you know, they're more like support, you know, IT support. They don't have the R&D capabilities. So they're a little really handsy about blockchain. So, but I think gradually as it becomes more of a competitive tool where it becomes, and it adds to the bottom line, you will begin to see more readiness and willingness of corporates and public administrations.
Okay, thank you, Bolaji. So here we were mainly talking about a private blockchain, a permission blockchain. You, Owen, at Treecoin, I assume you are using a public blockchain or a kind of hybrid blockchain, no? Because you were talking about a sidechain running on Ardor, which is a public blockchain. Does the fact to use this hybrid approach where you have a public and a permission side give you some more difficulties to talk with the Paraguayan authorities, for example, to get into the project, or this is one of the reasons why you go to Switzerland for establishing the company? Please explain us all this, what impact has in your business.
Definitely. Yeah, no, it's a great question. I mean, I'm a big fan of hybrid blockchains, as I think, you know, if deployed properly, it can really give sort of the best of both worlds approach. But I just wanted to quickly, I think Bolaji hit the nail on the head exactly. And when it comes to adoption, especially for larger corporates and government institutions, it can really come down to a case-by-case basis. Who's on the team? What's their background? How ready are they to take this risk? I mean, I think basically, you know, when we think about what we're proposing here with decentralized solutions, for a lot of these decision makers, it's really a paradigm shift for them to consider, because I mean, they're so hung up on trying to ensure data quality, data security, and the idea that a decentralized approach might actually add some security, might actually add some stability. It can really fly in the face of what a lot of these guys might think is common sense. You know, unless you really understand what's going on under the hood, decentralizing everything can really seem like a big risk to people. Now, when it comes to the hybrid blockchain approach, look, I mean, regardless of the tech stack, in our industry, these sales cycles, they take, you know, 12, 14, 16 months, depending on the kind of platform solution you're pitching. And what adds to this sort of time delay is just the complexity of the project. And I mean, I think that's where we spend a lot of our time. The salesmen and saleswomen that we all work with, I mean, they also have to become now educators that can really wax poetic about the features and applications here. For us with the hybrid blockchain, it's really interesting because as we're able to silo specific types of data into the private sphere and not have every transaction broadcast publicly, this has actually proven to be quite an asset for us in explaining these DLT solutions to corporates and to governments, because we can sort of quell their fears where they say, hey, you know, we have certain data that we don't feel comfortable allowing to be seen publicly. And so for us with the hybrid chain, it's been really interesting to show them the sort of best of both worlds approach. Now, it's, as I say, I mean, the sales cycles and the educational process that comes with sort of pitching these products, it is a lengthy process. And however, I think, you know, it's really cool to see, and speaking with my co-panelists here, to see the interest around the world and expanding. And I think that's really great. And I think as more and more use cases come together, we're going to see more interest and more adoption. And yeah, it's definitely an interesting ride.
Thank you, Owen. What about you, Shane? Because Qualculus, if I have a good understanding, is a public blockchain. and you have offer both for public administrations and for private corporations. Normally, in the traditional business world, public administrations are more slow for adoption, but is this the same case in blockchain? Are public administration also slower and more difficult to sell blockchain solutions, or corporates have more doubts with this decentralized technology? What's your experience?
Okay, all right. So I think the two speakers have also brought up very, very valid points. I'd like just to add that on Francisco's point here about how because we operate on the aspect of we have a public chain and we have enterprise and work closely with enterprises to create adoption on these enterprise chains in order to generate a whole ecosystem and create more transactions on the overall network, right? So I'd like to address basically that both the corporates and the public administrators, they have their own sets of concerns and they have their own barriers to entry when we get them to start to think about decentralized solutions and how these solutions can actually be implemented in their business. So to answer the question that was actually put out in the panel, actually both sides are somewhat ready for this for decentralized solutions, but they are completely not familiar about how these decentralized apps can be integrated into our existing ecosystem. So for enterprises, we are talking about having these solutions be implemented with some of our clients who are like listed companies in the ASX, listed companies in the Malaysia Stock Exchange where they're doing e-commerce, and we have also listed companies in the London Stock Exchange that are doing hardware solutions. So they are very excited when we first talk to them about blockchain and what we can bring to the table, because we are a holistic solution and we have spent time and investment into development like white label or ecosystem of products that can be plug and play into the system. But at the back of their mind, all they know is Bitcoin and blockchain technology and what they heard from the mainstream media about it. So they know the transformational effects about it, but they honestly don't have the expertise or they don't understand enough how this technology can be implemented. So that's what's happening on the enterprise. So, but on the public service aspect, these administrators tend to be slightly more overly cautious. They tend not to be risk takers. So on the public administration side, we have spoken to economic development boards, decision makers who are there basically with a mandate to bring emerging technologies into the country and have these solutions create opportunities for the people. So we're talking about EDB in Singapore, EDB in Malaysia, and we have worked with them on multiple solutions, test cases, and have these wallets rolled out. By the end of the day, a lot of them are willing to like dip their toes into the solution. They don't mind going to R&D, but at the end of the day, after months and months of writing white papers and doing analysis of the solution, they still prefer to take a back seat and wait until they can get further like instructions or like a mandate from the authorities that it's 100% safe to use. Only then they will jump in to use this solution and adopt it and put it to public use. So you can see very clearly on our part, we have spoken to a whole, we've cast a net quite wide to see both sides of the perspectives, and it goes to show that people like us, everyone that's in this chat here, the technologies and the sales people, we will just have to keep going at it and keep trying if we were to try to reach out to enterprises and public administrators. Today may not be the best time for it because regulations are still unclear in certain areas, and decentralized technologies are still not as secure on the fringe, not on the blockchain, but on the fringe. So these concerns have not been addressed yet. So as long as you keep trying and keep going at it, I believe eventually some of these concerns will already be answered by the regulators, and they can say, oh, these are maybe the solutions that we can start looking at. For example, medical records. This is the first thing that we want to solve, and that's blockchain. That's what blockchain can do. For the rest of the things where it involves, let's say, financial transactions or involves personal data, big data, this is something blockchain cannot do. So we should put the rest in the queue, and medical records should go first. So for people that are pushing solutions out like this in the market, we should be quite aware about. We must speak with the regulators. We must speak with the people that's on the ground to know what solutions is desirable, and then we put it out to address the problem, and then we can see real adoption in that space or within the country. That's how I view the things that's ongoing in our area.
Okay, Shane, thank you very much. In fact, was very interesting because you respond, the second question I was going to answer was to mention what are the obstacles, the specific obstacles you see. Very interesting because you say there are different obstacles if you are talking to a public administration or to a private company. Bolaji, could you please explain which are these obstacles, either for public administrations or public or private companies? Which are the main obstacles you face when you try to sell them blockchain solutions?
So one of the main obstacles, obviously, is a lack of regulation in the space. So this gives a lot of public administrators and even private companies, you know, a reason to be more cautious, and because they're not sure of the government's position. And in our example, we found as we began to see this was going to be an issue as far back as 2008, we started to engage the Nigerian Securities and Exchange Commission, which was, of course, in charge of regulating the capital markets. So we had several interactions with them, and they decided to work with the industry, some of us blockchain companies and crypto companies, to set up a committee which started to look at a draft regulatory framework for blockchain, digital assets, and cryptocurrencies. So this was obviously a very good thing, and it started to give a lot of people confidence. So it's very good to be able to identify some of these risks and try to come up with ways to mitigate them. And sometimes people want to see a demo. They want to see a pilot, and I know it could be expensive, but there are quite a number of, you know, pilots and demos out there. So we do a quick configuration, so and try to demo what things will look like to them, and that's very, very important, and actually almost comes out of the box with the NXT Adore platform. You know, we could initially just issue tokens in the name of the managing director of the client, or in the name of the CIO of the client, and he can begin to trade this token and see how things work. So these are how we handled some of those challenges.
So you approach the regulator to make him familiar. What about you, Owen? Have you approached the regulator or the authorities to explain what you want to do, and explaining them what's the technology behind your project?
Yeah, absolutely. I mean, we've actually been lucky just based on where we're based. So we're in Switzerland, which, as I'm sure some of you know, has been really a leader in the regulatory space over the last years. Now, while there still is some sort of uncertainty, we've been lucky enough to be, you know, regulated and be in good contact with the Swiss regulators since 2018, and that's actually been quite a smooth process. Now, talking with the Paraguayan government, for example, it's a little bit more unclear. Their sort of regulatory approach isn't as robust, maybe. However, it is nice to see certain companies looking to these leaders, these global leaders, and sort of using them as a reference point in terms of how they're dealing with the assets. That's definitely quite helpful. Now, I think both my colleagues made some really good points about the obstacles. One thing I wanted to talk about, and Shane touched on this too, was just the timing right now. I mean, so as discussed also by Mobiligi, we're doing a lot of pilot projects right now, a lot of proof of use case proofs and stuff like this. However, the general public isn't really aware of blockchain solutions much more than the sort of headlines about Bitcoin and these kind of things. And when we're talking about these big institutions and corporates, often before we're going to be able to get them to make a pivot, to make a real change, there has to be an undeniable pain point. And, you know, and that comes from contrasting what they're dealing with to what's available on the market. And because, I would say, because of the sort of infantile state of our industry right now, it's sort of easy to be willfully blind or to ignore a lot of the points and the real strengths of a decentralized solution. And so I think what's really going to help is just as projects gain more and more visibility, and particularly public institutions. I mean, I'm thinking about things like, you know, ensuring voter security, voting security, and also we talked also about, you know, land registration, these kind of very clear aspects where a public transparent system makes total sense. We're going to get to a stage, and hopefully it's sooner rather than later, where governments around the world are not going to be able to ignore the example use cases of other countries, other jurisdictions, other companies using these solutions that do ensure transparency and public trust in here. So I think the next couple of years is going to be really exciting as our solutions gain more traction, more visibility, and it won't be able to be ignored anymore. So I think that's going to really uptick the adoption process.
Thank you very much. Thank you very much, Shane. Thank you very much, Owen. Now I would like to change a little bit what the question. It's about the traditional IT world. No? According to Gartner, which is a very important consultancy, the CIOs, the chief information officers of the companies, will not look seriously to buy blockchain solutions until 2023. 2023, yes. So that's still 2 years from now. And I can tell you here in Yellowrida, as a blockchain technology provider, we have a lot of difficulty to really have the interest of the traditional people that is running the servers and the IT of the companies. They are busy with their day-to-day operations. They don't know very much the technology, which is quite surprisingly, no, because they should be the experts on the new technologies. But normally, it's as Bolaji said, it's more excited about the technology. Maybe someone that has been in crypto, someone that is in the innovation department, that the traditional IT. No, have you experienced this interest of traditional IT into the blockchain technology, Shane, in your contacts with your customers?
Yeah, I appreciate a point that you brought up, Francisco. This is something that we have actually actively been exploring and actually actively engaging with multiple public and private companies, the CIO level, C-suite executives who are supposedly very ahead of the pack in terms of like the newest, most emerging and impressive technology to implement. We have heard of a number of players. I don't like to bring up names, but one of the sovereign wealth fund organizations here in Singapore that takes care of the retirement savings for the citizens actually publicly came out telling people that blockchain is the future, and they like to implement more blockchain solutions for information tracking purposes and making sure that citizens' personal data is not compromised using technologies like blockchain. And then because of this article, we got so excited saying, oh, maybe this organization is ready to implement blockchain. So we actually went straight up to them, shoot them an email, and we actually spoke directly with the CIO. So we made a trip down to the office. It's this very nice, fanciful place. And after presenting to them the solution that we had in mind and how we can do something for the citizens of the country, they turned around saying that things like blockchain is simply an expensive data storage and nothing more. So having made the effort and thought that the people now is ready to take the next step, and then having to find out that actually no, the executive education of the proven use cases and the things that can be done using blockchain for them is still very, very limited. So these CIOs don't know enough, or they don't have enough ideas about how this technology can be implemented at a larger scale and solve problems. So this is why when we speak to them, we feel that simply because they have not enough education about it, they simply like to they simply brush the tech off, and then they just wait until they get further regulatory clarity and authorization from the high ups, before they start implementing or taking the technology seriously. And also, I think around here, blockchain technology, or the talents behind blockchain technology is very scarce. And for that reason, when they look at the numbers, they say, oh, this could be prohibitively expensive for them to buy and to manage. And then by just looking at numbers, it turns them off, right? So these are all concerns, real, genuine concerns that we have for some of these CIOs here in major corporations, and there must be solutions that we can do as technologies, as innovators, to get them to see how these technologies can be implemented. So I have came up with like a number of ideas, things like how we can do like part-time CTOs, and these organizations hiring someone from blockchain advisors, these guys who have done and launched production-grade blockchain solutions within the organization. And having all these people within the organization helps them to finally be able to see that, blockchain is not, after all, just an expensive database. It is so much more than it. It's smart contracts. It is asymmetric encryption. It is using stable coins, financial transactions, decentralized ledgers, and nodes that are verified by other public organizations from other parts of Singapore, or even neighboring countries. So all of these things needs to be considered, and all this knowledge don't come from in-house. It has to come from someone outside of the organization. And I believe all this eventually will come to play, maybe in several months or years if we are lucky.
Very nice. Yeah, I share a lot of the points you see. What about you, Bolaji? The IT departments are involved? Are your friends when you try to sell the solution, or are just a little bit an obstacle because they don't feel safe, they don't understand very well the technology, and just they want to keep the IT running as always? What's your point here?
Yeah, I mean, with Gartner's prediction, it might be almost right, because from our engagements, with guys in the IT departments, like for a bank, they are believers, but they still find it a challenge to convince the board of the bank. And of course, because of the lack of regulation, the banks are very hesitant to proceed, for instance. But I think that it's going to become also a question of where that necessity and industry revolution, meet. When it begins to become a necessity for your bottom line, as you would remember in the early days of .com, of the internet, you had companies like Amazon spring up, start to compete with Walmart, and so those type of examples, when you begin to see like new companies emerging and growing very rapidly because they're using blockchain and they have this as a competitive advantage, that is when a lot of people will begin to wake up, when they begin to lose business to these new startups. We've seen it also recently with Netflix. Now you have Disney also trying to come up with online streaming for their content. So you've had retailers move from having physical stores to e-shops. So when it becomes a necessity, everybody's going to jump on board. And it's also true for the technology adoption life cycle, where you move from innovators, early adopters, and then you have that chasm, that process where early adopters now become early majorities. And that's where, you're going to see that catalyst, that boom, where everybody's just trying to get on board. And of course, the late majority and the laggards will follow. So I think that, the more we start seeing organizations like the World Bank issuing bonds on the blockchain, and we see organizations like the US Federal Reserve issuing the digital dollar, for instance. There was an announcement yesterday, I think, by Canadian bank that's going to be offering the Canadian dollar as a stable coin backed by assets. So when and the likes of JP Morgan also as issued JP coin, when those sort of organizations and governments or institutions are beginning to drive the agenda of the day and take advantage, everybody else will start coming along. So it's now a waiting game to see, okay, who can I copy? Where is the use case? People don't want to be the first to take that risk. They want to follow. And that's what happens with most technology adoption life cycles.
That makes a lot of sense, Bolaji. Thank you very much for sharing that. I would like to change a little bit the question to Owen, because Shane pointed out a very interesting thing, was the lack of talent. You, Owen, you are launching a very innovative project, and this requires talent to have all the IT all together. What are have you faced any problem to have this team of IT with the knowledge, the necessary knowledge to launch the project? Please share with us your experience there.
Yeah, sure. Great question. I mean, similar to the regulatory situation in Switzerland, we've also been incredibly lucky with our technology partners. I mean, even though, as we've been talking about, this industry is still in an infantile stage, actually on the ground, I mean, there are a lot of companies with years of experience in implementing these solutions. And thankfully, I mean, our project here, securities on a blockchain, this isn't, it's a little bit closer to the traditional world than sort of a complete a platform solution or something like that, which represents really a complete paradigm shift and more of a hands-off data control issue for many companies. So I think actually, like, the complexity of our technology stack for Treecoin, it's actually quite straightforward, and it's just sort of a new medium to issue these securities on. And so that actually hasn't been too much of an issue for us. However, in previous positions, previous projects, with more of a comprehensive sort of solution that really requires a paradigm shift in thinking, definitely it's been difficult on both sides. The in-house technology for our companies in order to build the solutions that work, and then also, as Shane pointed out too, I mean, a lot of these, where you're trying to sell them to, they often don't have the in-house talent that's going to be able to decrypt, decipher, and disseminate the information to the C-level and to the board in a way that really makes sense. So yeah, as I say, with Treecoin, we've actually been quite lucky, because how we use blockchain and our crypto offering, it's quite close to certain traditional offerings. So the jump in understanding isn't so great. However, for many other applications, it really can be, and that's where it takes talent, of course, on the tech side and on the sales team too. But I think Bolaji made a really interesting point, which is, for a lot of these solutions, what it really takes is getting the decision makers onto a platform, interacting with the assets, really showing them, moving assets around. I think it can really take this sort of hands-on approach to walk them through these new solutions. And I think that's a great approach.
Okay, thank you very much. So now we are going to the last question, and maybe if we can be a little bit quick, we could have some questions from the audience. It's about the dilemma between private blockchains, public blockchains, hybrid blockchains. In the beginning, corporates was all about private blockchains, but then we face big failures like this TradeLens blockchain from IBM and a consortium, where the competitors don't want to join the consortia because they say it's controlled by some other competitor. In fact, IBM announced that they have reduced the workforce dedicated to blockchain. Then everybody say, okay, this is the end of private blockchains. Everything will be open and public blockchains. But then we face, oh no, we cannot do that because the regulation needs KYC. We cannot do KYC in public blockchain. So what we do, Shane, what's your approach here? Qualculus, what you do in Qualculus?
Okay, yeah, I completely agree with you. What is happening right now with the private blockchain space, every day there's something exciting happening, right? Some competitor is infringing on some other competitor's right to validate the transactions or blocking the transactions. So all these issues, in fact, has already been addressed on the public network. So if you've seen, like, I think Bitcoin Cash or like the Ethereum blockchain, it has happened before, but because it is more decentralized, eventually the transactions that are put in the mempool gets through eventually. So decentralization is definitely necessary in order to maintain a fair, transparent transaction network that anyone and everyone, including enterprises, can use to develop and put on transactions that is trusted by all parties involved in the transaction. So what we have done here at Qualculus is we have added the enterprise layer, which is the enterprise chain. And these enterprise chains are able to process enterprise transactions, and we have hybrid permissioning capabilities that are installed in these enterprise chains, as well as KYC embedded solutions there. So these these enterprise chains actually fulfill all the KYC AML criteria, and even to a certain extent, the data is being stored exclusively in-house within the country or within the company that is operating the solution. And this way, we feel that we get a balance by adopting a hybrid approach where transactions are registered and actually processed on the first layer, which is the enterprise side, and eventually KYC is done. There is no hanky-panky stuff going on there. And then we have these transactions secured on the public network, which is something that everyone and anyone can see, but to the public eye, they will not know who is the one making the transaction because everyone is pseudo-anonymous. Only the organization is aware of who the participants are. So this way, we feel that we can get the balance, the best of both worlds. We can get enterprises to be comfortable using our solution, sufficiently confident of applying things like fintech applications, things like storing personal data, small pieces of personal data on the enterprise side, and this enterprise and this information are encrypted on the public chain. So this way, we feel that we can pursue both strategies of growing a decentralized network and using and having the security of the decentralized network, and also have the enterprise create adoption that fulfills all regulatory requirements. Yeah, so that is our approach, and I think it works best in the case of working with public and private people, entities. Yeah.
Thank you very much, Shane. What about you, Bolaji? Do you think it is necessary to have a leg into the open blockchain just for giving transparency to all blockchain projects, or do you think pure private blockchains have still a future? What's your point there?
From the practicality of it, and given that, you know, IT has moved so much into cloud services, and also given the fact that public blockchains are driving the innovation, I think that we're going to see more adoption of public blockchain than private, because with private, you're going to have that huge cost of adoption, training, and then having the competency in-house for this organization. Now, that might be fine for tech companies or tech-oriented companies, but really, if we think about it, computing is becoming more of a utility more and more. We've seen the provision from Amazon Cloud, Azure, IBM Cloud, Google Cloud, and, you know, the huge amount of revenue that brings to those organizations tells you how much companies are relying on their services. I think for the complexity also, there's just no need for small to medium-sized companies or even some like organizations to have so much in-house competency and capacity for blockchain. If the innovation really is coming from the public blockchain, why would they invest so much in a private blockchain? And then you have regulators like the US Securities and Exchange Commission, which has clearly defined regulations for security tokens, and they've permitted several crypto exchanges to operate, and also states like New York State also issues licenses for crypto exchange. You have the FinCEN, which obviously issues its licenses for crypto exchange as money transfer entities. So with all this play, and you have also the US Comptroller of Currencies has also permitted banks to be custodians of crypto. And crypto continues to drive the innovation. We've seen the advent of DeFi, decentralized finance, taking off. So I think just like the internet story, and even with fax machines and telephone, at the end of the day, they're just going to, more and more people will just rely on a provider. And those providers are likely to be companies like Gelaruda that has public blockchain or some sort of hybrid solution that can help people to quickly get started and rather not spend too much time and investments on trying to deploy a private blockchain. And also this example goes with social engagement for marketing products, you know, LinkedIn, Instagram, Facebook. So these have become tools for many small, medium-sized businesses to begin to engage their customers and get feedback. And with those innovations being available, those companies are able to do so through those platforms. And I think we're going to begin to see that with public blockchains, because they're now trusted, obviously. Unlike Bitcoin, which was invented by Satoshi, many of these projects now have a face. You know, they now have scheduled upgrades, improvement proposals being accepted, and more open to the general public, and so on and so forth. So that's my take on that.
Thank you very much, Boraji. I would like to ask Owen. Owen, explain us that Treecoin is running on an hybrid model. We use a sidechain on the Ardor public blockchain. Why did you choose this approach? What was the combining point for you to go this path?
Yeah, definitely. Well, we have a big requirement for KYC as well, as we're dealing with financial products here, so that helps. And then I think too, I mean, we can't talk about hybrid solutions without discussing the issues of speed and cost of transactions on some of these public blockchain systems. I mean, anyone, I'm sure all my colleagues and people watching, everyone's got a story about trying to move assets right now on Ethereum using a DEX to swap, and you know, the problem of transaction costs and speed. This uncertainty and cost fluctuation really just won't work in many corporate settings. I mean, I think, look, both my colleagues made great points about the virtues of public blockchains, and I fully agree. But the reality is, especially for a lot of corporates, there's just simply some data that industry won't risk to anything but a completely controlled environment. And this is why I think a hybrid solution that maybe allows even for a modular approach, we were talking about sort of segmenting data into different aspects. I think that can be really great. And just to even put on a marketing hat for a second, Balaji talked about marketing on LinkedIn and stuff. I mean, a hybrid solution really allows a company to create all kinds of fantastic communication and marketing about the virtues of public ledgers, transparency, decentralization. They'll be able to align their company with these virtues, but at the same time, they'll be able to keep the really important data private. So this can be a fantastic sort of best of both worlds approach, definitely.
Very nice. Well, thank you very much. We have 5 minutes left. Maybe Carmen could open for the audience if they have some questions for our panelists.
Sure. But first of all, I want to say that thank you very much for this fascinating panel. Thank you. Personal thanks to Owen, Shane, and Balaji. Bolaji, sorry, for connecting from different parts of the world to our bootcamp. And Francisco, to you also, thank you and congratulations for organizing such an interesting panel, really. And yes, we have actually 4 minutes. So if any participant would like to ask something, you can use the chat or also open your microphone.
Okay, I'll jump in. Can you guys hear me okay?
Yes?
Yes.
Wonderful. So thanks, guys. Very interesting conversation. One point that I think you touched barely, when we're speaking about hybrid tokenization vehicles, or the hybrid, let's say, blockchains solutions. There's this new concept I have personally been very attracted to. I wanted to hear you guys' opinion, which is the Binance Smart Chain and their approach, and especially, putting this from the perspective of commercialization, which is a topic at hand. I'm particularly interested in, the massive user base that we're talking about here, and then from a, let's say, from a product owner standpoint, it's very hard to say, should I go for the scalability side, or should I go for to try to attract as many base users as possible? So you see the NFTs, and one very cool subject is the lately how they've been playing with the club, the football club tokens and NFTs, and then you're basically minting or mining, farming tokens basically by coming into the Binance Smart Chain, which is quite powerful. So just wanted to hear what you guys have been reading about this Binance Smart Chain, if it's something relevant to the topic from that standpoint.
Sure. I'm happy to jump in just quickly. I think what we can say about the Binance Smart Chain is, it's the thirst for it and the interest is undeniable. If you look at, in the last couple of weeks, how the tokens have been moving up in the markets and things like this. The Binance Smart Chain for me is really interesting, and I'm sure my colleagues have more to say as well, because it's sort of, and I think Balaji mentioned this too, the public blockchains are really leading the innovation. And then when we see the Binance Smart Chain sort of, I don't want to say copying, but maybe I just will, copying certain innovations from Ethereum and from some of the DEXs we see on there, but then ensuring that scalability. So I think the question is a great one, because it does come down to that question of what's the hierarchy of needs for a given company? Is it the scalability, or is it the public nature? And I think it's a really interesting question.
Okay, so if there are no more questions.
Maybe I can add, it's not a question, but about the Binance Smart Chain. So the word copy is perfectly fine, because they literally forked the Ethereum, and all they did was lower the centralization. So, decentralization. So there are only 13 validators, I think. So that's the answer to the speed. So if Ethereum is very decentralized and they want to keep it that way, and the Binance chain, all they did was just to lower the centralization aspect of that. And that's how they get the speed. So yeah, it's not very innovative solution in this case.
Thank you.
Yeah, I think that's a good point. However, I think it can be said too, sometimes the business market doesn't just need innovation, right? And if they've obviously found a niche where there's a lot of projects and companies that are really sort of in that hierarchy of needs, the scalability is the top priority. And so I think in this case, it can make business sense, but I definitely agree with what you're saying.
I'd like to add also that perhaps Binance Smart Chain is more tailored towards this sort of public-based ICO or IEO type of projects, where these companies are really more startup-like, and they may only be familiar with certain sets of technology. I'm not exactly familiar with what programming languages that they're using. Like if I heard you right, and say that they were copy or a clone of Ethereum, so I assume Solidity smart contracts will be something that they are operating. So they are just accessing the similar talent pool, and they are not actually exploring other areas where I believe Jellyradar ourselves is exploring things like enterprise blockchain. These guys have a completely different set of expectations, compliance standards, and needs as well. So those solutions, I don't expect Binance to be able to fulfill those needs immediately. They still continue to primarily focus on smaller startup-based projects that basically create adoption in decentralized apps for the people. So I feel that Binance is doing very well because it has a whole ecosystem and can just get people to plug and play, say their smart contract knowledge that they have learned from Ethereum, and still be able to benefit from all of the other things that Binance is giving them, things like launch pool, things like getting listed on decentralized exchanges. So these are all really early stage projects. Enterprises are not interested in all of these things, and I feel that that's where the niche of Jellyradar and Aldo and ourselves really come in, and we try and carve our own niche. Yeah.
Maybe do we have some few minutes, Carmen?
Maybe, yeah, well, we can have
just
3 more minutes.
Okay, so if we talk about, continuing about Binance Chain from developers perspective, so because it's basically Ethereum, and so as a developer, I can use this Binance Chain as to better test my my application into the real world with real money, because all you need to do is to change the few things in order to run on Binance Chain. So if you look on things like Uniswap, it's the same thing as PancakeSwap. It's just a few changes in this case. So currently it is really, well, because of Ethereum fees are really high. As a developer, it is not feasible for me to test my application with the real world in this case. So I can do it on the Binance Chain. So, but in the future, if you take a look on this decentralization aspect, if Binance will see pressure from regulatory bodies in some sense, and because there's only 12 or 13 or how many validators, they can easily shut it down in this case. But if you look on Ethereum's case, it is because of decentralization, it is not so easy to shut down these kinds of things. So as from developers' perspective, I see the Binance Chain as a very good testing ground in the real world circumstances with real world money and things like that. But if I am looking for my dApp to be run in decentralized environment, and if it's important for me and crucial that this decentralization aspect, then Ethereum is probably the best way to go. After they will reduce the fees, of course.
Mm-hmm.
I mean, if I can just add to that, I mean, obviously Binance Smart Chain is an alternative and a fork of Ethereum, but if we're talking about hybrids, I think from the Jellyradar's Adore parent chain and child chain architecture, there is the BitSwift chain that allows you to issue Ethereum tokens. And in a way, that gives an advantage because it's sort of a wrapped Ethereum token that enables you to trade that token within the Adore architecture and not necessarily incur so much fees that are underlining with the Ethereum token. So there are different ways to look at it when you're looking at like private enterprise blockchains, and then you want to bridge into that public blockchains. And of course, you could also even have a KYC layer that enables you to meet different regulatory requirements. But you know, folks are not they're not really new in terms of what Binance has been able to do with the smart chain, because we've seen that with the Bitcoin Cash, we've seen that with other similar blockchains that are hugely successful, like even the Litecoin in the early days. Ethereum itself also has a LIBOR alternative, which is actually approved by the U.S. Reserve Bank for trading all sorts of securities within the banking and financial services platform industry in the U.S. So yes, you know, there are different ways of doing of looking at how to get rid of this cost. So Binance Chain itself, I think it came about more because of the huge access Binance has to traders. You know, they're the largest exchange in the world, and we know they're, you know, probably 2 or 3 times the size of Coinbase, and we're, you know, people have talked about Coinbase doing an IPO with a projected market cap of $90 billion. So clearly, if Coinbase can do that, we know Binance can probably shoot for more, and because they just have a huge amount of user base, and this is why Monsters, the smart chain, is also been very successful, and it makes sense for them as an organization to look at that, to take advantage of their customer base.
Thank you, Bolaji. I'm sorry for interrupting, but we are also quite late for the next one. So I'm sorry, but we have to close this discussion right here. I'm very sorry for this, but well, I hope for the participants it was still very interesting and relevant. So thank you again, all of you, for participating in this panel session. Thank you, Francisco. We keep in touch.